Good morning, everyone, and welcome to the European crossover webinar. And we have seen the cash dollar index go and take a further dip here. You can see that here. And let's go and take a look at the euro. And we've gone and made that track above 119. As we indicated in the bias chart yesterday, or I did in the chat, stating was that it doesn't matter if it hits 1880 or 1908. The real resistance comes in at 1927. We have gone and taken just a jump up here to 1905, and we're still plucking along. Although we are into support here on the cash dollar index, I think we had it at 92.56, so we have dipped as low as 51, but we're just above 92.58 here. And cable has continued to push higher. Same thing here in cable, even though it was a further bit out. I was still stating was that resistance doesn't really come in until 32.40. I mean, we're moving higher, but I mean, so you're not seeing any real pushback, and I think that you're not going to see any real pushback until we get up to the those levels. 1927, I think it was 32.40 for the cable. So obviously the dollar index under pressure. And I don't think we'll see us try and make some type of a stab or a real defense. We may see a little bit here because we are at a technical level here, which we have for 56. I believe it's 56 on the bias chart. So we take a look here. Yeah, 56 we had. See here. From yesterday. So we've come into that. I think we kept the 56 for today. Kind of glad to see this thing right here, which is, I don't know if you saw, but the Canadian finance minister actually resigned yesterday. Kind of a late, had a, we call press, I guess it was a press conference, but anyway, and resigned, and we actually saw an initial bounce, but here we are making new lows again here in dollar CAD. Probably, I guess, a lot more to do with just the general weakness here that we're seeing in dollar. You're seeing the same thing here in the Aussie dollars. We continue to move higher. The whole thing with the Fed minutes is the thought that they might be offering guidance, and we might be in a position where we could see the dollar really slip. And with that, let's go and move into gold. And look at, here's gold now moving to new highs. Look at this. Holy smokes. Fresh highs here in the morning. Now, those aren't the all-time highs, but I'm saying we're continuing to press higher in here. Thought we might take a pause around here. Oh, we did a little bit. I mean, I guess it was just a pause, but we're still pushing the door higher. So fresh highs as far as since that bounce off of that VWAP we talked about from before. And you can see here the NASDAQ also trying to push higher. We actually came into 127% extension here in Asia, and we kind of pared back just a little bit, but once again, the bid's still on, and if with the Fed minutes are due out till tomorrow, that's what I was saying was I don't think we're going to see any significant volume until tomorrow. But that being said, with FX, the bid continues in the euro, and there's no let up. I mean, we're now at 1889. We have come up to 1905, and that's the saying. Until we get to that point, we'll see how the FOMC minutes come out. That will be a big determiner whether we extend for another move, that being, i.e., lower in the dollar, higher in the euro, or we make a stand and maybe we go and pair back. But I think until we get to there, it's hard to step in the way of what's already an ongoing move, i.e. in the dollar weakening or these indices moving higher. With that, we'll go in and take a look at the news. So today we do get New Zealand dairy prices, and as we come into the States, we will have building permits at 8:30 Eastern, as well as housing starts. Obviously, we've seen huge numbers here with housing. A lot of people moving out of the city, so we're just seeing just a big, huge jump. Despite I guess people would be concerned about the economy, and I think obviously that's weaker. But as far as housing, we have really taken off, and lumber prices have just literally doubled. I posted or shared the chart over the weekend. What a heck of a move it's been. That's going to be it then. It'll just be building permits and housing starts at 8:30 Eastern. And of course, we do have New Zealand dairy prices. With that, we'll go on and take a look at the news here. Starting set for a bumpy ride as Brexit talks restart. As Britain and European Union restart talks to try to agree to a trade deal before the end of 2020, traders are bracing for a new round of volatility for the pound that could end the currency's recent run higher. Sterling is up 6.4% against the dollar since January 29, trading up to 131, despite the risk that Britain will be cast adrift from the EU in January without a trade agreement in place. The pound also performed less solidly versus the euro, but a 1% gain since June is still noteworthy given the impasse between London and Brussels. Dominic Bunning, senior FX strategist at HSBC, says sterling's gains owe much to the broad dollar weakness and predicts the pound will fall to 120 by the end of 2020. With Britain enduring one of the worst economic contractions among the G7 nations and one of the highest per capita coronavirus death rates in Europe, sterling looks vulnerable to a correction. Option market suggests some nervousness with costs elevated, indicating a fear of unexpected moves, risk reversals, the difference between the call and put option demands. Some show investors still prefer options to sell the pound, though not as much as in March. Britain exited the EU in January, but has until December 31st to agree to a deal on its future trading relationship. UK government said again on Monday it believed it could seal an agreement in September. Without a deal, Britain faces a so-called hard Brexit. Many investors fear would significantly damage its economy. Monday's resumption of talks should bring choppier trading for the pound, said Kenneth Brew, head of corporate research at Societe Generale. The point that I've been making for the past 2 weeks is that cable is at 131, flatters the valuation of the pound. So I would expect cable to drop below 130 in the coming weeks towards 127, he said. September, October line is really when it's money time. That's when things can happen. Talks last month ending with both sides trading barbs. Sterling faces another headwind too. A lockdown to fight the spread of the coronavirus caused the UK economy, now officially in recession, to record a record slump in the second quarter to gross domestic product. To save the government has borrowed unprecedented amounts, swelling national debt to 99.6% of GDP. The UK faces a number of fundamental changes that will only highlight and exacerbate the economic impact of coronavirus. Bunning said, listing large fiscal and current account deficits, reliance on a foreign capital. Bank of England sounded relatively upbeat on the economy at its last meeting, while warning it would take until the end of 2021 for the economy to gain a previous size. Analysts believe things will worsen when the government jobs furlough scheme, which has supported 9.6 million people through the COVID, is lockdown winds down in October. The BOE said it saw no immediate case to cut interest rates below zero, though money market suggests the rates could fall into negative territory. Investors have, meanwhile, further trimmed their net short sterling positions according to CFTC data. But with investors pushing their net long euro positions to record high, they also appear reluctant to express the negative stance on the dollar via the pound. Roger Hallam, Chief Investment Officer for the currencies at JP Morgan Assets, says he's expected the Britain to forge a deal with the EU by December 31st, but the deal will have more of a hard Brexit feel, he said, limiting any gains for sterling. And on to the Aussie dollar, which we know has continued to push higher. Aussie dollar eyes recent peak, and breaks higher on Kiwi cousin. The Australian dollar moved into striking distance of recent highs on Tuesday as the central bank reaffirmed the outlook for steady policy while stealing a march on its New Zealand counterpart. Aussie wobbled just a little on news that China had begun an anti-dumping investigation into imports of wine from Australia. The currency is still up 1/10 at 72.22. Minutes of the RBA's policy meeting shows the board saw no need to adjust the stimulus package at the moment, but was ready to ease again if needed. The central bank has already trimmed its forecast for economic recovery to take account of the coronavirus. Data on the card spending from ANZ showed a steep pullback in Victoria last week, had flattened growth nationally. Outside Victoria, the growth in total ANZ observed spending was much stronger at 33% year over year, and Victoria's total spending was negative 36% year over year. New Zealand dollar was lagging at 65.48. RBA's reluctance to act further in a marked contrast with the RBNZ, which last week sharply expanded its bond buying campaign to 100 New Zealand dollars and extended it out to mid-2022. The RBNZ is ready to contemplate negative rates if more easing is needed, something the RBA has ruled out. Given the continued diverging interest rate expectations of the RBNZ and the RBA, the New Zealand AUD is now testing its multi-year trend line support levels at around 91 cents, said Hamish Wilkinson, a senior dealer at Kiwi Bank. If negative rates become a reality in the coming months, then it's likelihood that the New Zealand AUD will be trading well below 90 cents. We're seeing a little push here with the NASDAQ. And lastly, let's go pull up the dollar. The dollar falls as selling pressure builds on multiple fronts. The dollar extended its fall to its fresh lows against a range of currencies on Tuesday after a triple blow of retreating yields, soft U.S. economic data, and a dip in safe haven demand exerted broad selling pressure. Against the Swiss franc, the dollar fell more than 1/10 to its fresh 5.5-year low. The background data for the moves we're seeing today is the overall weakness of the dollar, said Shinichiro Kododo, senior strategist at Barclays, and the Swiss franc strengthened because of a euro-led decline in the U.S. dollar since July. The Aussie gains were capped by news China began an anti-dumping investigation into imports of Australian wine. Investors have been relieved by the delay of the review of the U.S.-China trade, which has left the agreement standing and reinforced the belief the trade relationship can hold even amidst conflict on multiple other fronts. Flash rally in tech stocks added to the positive mood and strength with a pullback in U.S. yields and a weak reading in U.S. manufacturing surveys as many traders are sticking to their bearish convictions on the dollar. Extending short dollar positions risk a sharp pullback if the dollar downside stalls further, but for the negatives for the dollar are mostly still in place. Like I said, I don't think it's going to make a stand until we get to FOMC minutes tomorrow, if it's going to make a stand. Delinquency rates for residential mortgages also posted the largest quarterly increase on record. A high delinquency rate for an extended period can impair the banking system, because Commonwealth Bank Wealth of Australia currency analyst Joe Capurso. An impaired banking system could hold back the U.S. economic recovery like it did in the aftermath of the 2008 crisis, he said. The Japanese yen rose back past 106 per dollar to 105.63 after a 2.6 basis point drop in U.S. government bond yields overnight. Well, that certainly has a big impact. So with that, we'll go into the analysis. And we're looking right now at the euro on a 2-hour chart. So the euro posted a solid close on Monday, albeit in a relatively quiet session. Resistance remains 1927 with support at 1805. So once again, I mean, as I mentioned before, is we can dance around in these upper levels all we want, which at the time I said, and I think that was the high then at that point, which I said we could make a run up to 1880 or 1908. It's still at the end of the day, it's still 1927. So we made it up to 1880, and then we kind of pared back a bit, and here we are reasserting ourselves. So once again, the real resistance doesn't come in until 1927, and then support, I have it down here, 1805. You can see that coming in right there. So the only difference is we're just moving this a little bit higher. And we'll move into the cable. And here's the cable, a 2-hour chart. And like I said, it's just been relatively tight ranges across the board. And why I'm just kind of focusing right now with the 2-hour. So cable managed to eke out another high with resistance remain at 3204. So actually, I thought it was 3240. It's 3204. Support will be 3015. So we'll get a little bit closer. But just like I said before, you make a little bit of a high yesterday or here. We pare back a few pips. But once again, it doesn't. My point is, the rubber doesn't meet the road until we get to 1927, i.e. the euro, or 3204 with the cable. So 3204, we are dipping this down to 3015. And we'll move on into the Aussie. So the Aussie closed above the bias chart resistance of 7204. As previously noted, two consecutive closes above 7204 will open a challenge of 7332. Resistance for Tuesday will be 7242 with support of 7140. This is rather interesting because, like I said, FOMC minutes are not going to be till tomorrow, but my point was if we close two consecutive closes above 7204, opens the door for a challenge now to 7332. So we shall see. That being said, resistance is going to be 7242. And this moves up to 7140. Kiwi tested new lows on the recent down move, but mildly recovered. You can see that right here. Resistance will remain 6601 with support at 6471. So I believe there's no changes here. No changes. And the Kiwi. And from there, we'll go move into the dollar CAD. So the dollar CAD remains stuck at the lows. A break of 32 to at least test stops appears a likelihood. Support will be 31.53 with resistance at 32.68. So sorry, it looks like we've gone and dipped below that, and so we're looking at 31.53. Below that, I think we have 31.24, but 31.53. Upside 32.68. We can probably move that right there is at 32.66, so we can lower that down to 32.66. Well, not that far off. And let's go into the dollar peso. So the dollar peso rebounded on Monday after retesting 21.92. The pair tested 22.20 on the upside. Support will be 22.07. Looks like we've already taken a dip towards there, with resistance at 22.31. So 22.07. 22.31. And considering where we are right now, we're pairing back. We'll leave that. Well, the resistance is going to be at that resistance bar, which is going to be 22.20. So, considering how we just turned around and fell back in the dollar weakness, let's go and move into the dollar yen. The dollar yen rolled over hard, blowing through the bias chart support at 634. Support for Tuesday will be 578. Well, you can see with rates, U.S. rates giving up the ghost. We've even extended this low, so we even blew through that. So obviously we've gone and tested on this lower end. Let's go and take a look at on a 2-hour chart what we have there. But with U.S. rates, it just turned around, and after all that big old move, and then with the weaker dollar and really just being exacerbated with the U.S. rates, it just turned around and just gave up everything it had. So support right here, you see all these touches right here would come in right there at 540. I think it took a dip just below that. 540. Boy, has that been some kind of a move? And on the upside, boy, I'm sure got to think that some people really got stung on this move because it looked like it was up and away, which we did get above 647, took off. We stalled, and on this pullback, look for that to hold in here. And boy, with U.S. rates just sliding by, there went the bid, and on top of that, the dollar weakening. It was just the chicken before the egg. Is it the U.S. rates pushing the dollar lower? Is the dollar? I mean, at least with the yen, the dollar weakening pushing it, but then being exacerbated by U.S. yields is just one following the other. On the upside, resistance would come in right there, which would be for right now 592. Actually, we can push it up right there, 596. And on to the cash dollar index. The dollar index closed sub 92.89 with immediate eyes on 92.56. A break below will challenge 92.19. So for right now, we'll go with this 92.56. Actually, it's already dipped down to 92.51, but it's just barely hanging on. So, and then below that is 92.19. So, well, actually, just covered there, 92.56/19. And on the upside, right there, 93.11. It's in sad shape. And with that, we'll go into the cross rates. So we have the move going down here to 69.44. We've gone in with the Kiwi weakening. We've blown through that. So looking for the most touches is going to come in. You see right there, this bar, and coming right across there, which is going to be 68.80. And on the upside, which is going to be this support here, broken, 69.79. And on to the euro yen. Well, this thing has been up and away. We had 26.48, no changes there. And on the downside, we had 25.56. And we've already actually come and dipped down here. Right here, you see this close right there? That's going to be support, which actually is right there at 25.35. Dip that down here. Didn't think we'd make it down that far. And moving on to the euro odd. We had 64.18. That's going to stay the same as, and then on the upside, the only difference is we will tighten it up here at 65, right there, 65.27. And on to the euro kiwi. Still continuing to press up higher here. That I believe our resistance was 82.24. No, we did. We had 81.77. I'm surprised we haven't pushed it higher. We did make it up today as high as 81.94 before paring back a bit here. But ultimately, it's this key weekly level that comes into place. And if we do see some strength, further strength in the euro, I'm surprised here because no wonder I did have it at 77 because we did have a gravestone doji from before, but we've continued to press higher. So at least you know where the risk level is going to be, which would be 82.24. Does look like we were open to taking a bit of a pause here, but we're still pushing up. And the close right there, open 80.46. 84.6, we had 80.51. We'll go and keep the 80.51 here, but boy, we are still adding on to this. And then on to the Aussie yen. This thing has really held up well. Look at that. I don't know if we'll make it all the way up to 77.10. It's just going to be these highs right here, 76.69. $76.70. And we'll keep the 75.40 on the downside. And then moving on to the guppy. I still like this 38.72 here on the downside for support. And on the upside, the closing bar right there. 39.72. I've got 39.69 to 39.72. And for starting odd, $81.60. I still like that. And you can see here the $81.60. It's held today to the pip. And then on the upside, 83.16. I'm going to go with these closes coming across here, and that is 82.93. So we'll lower that just a bit. That's going to take care of it here for FX. We're still pressing ahead here. 1894. And dollar CAD still remains under pressure. And we'll close off quickly with the indices. You can see here gold still steady right here. Going into these FOMC minutes for tomorrow. NASDAQ still on the push here, as well as in the SPOOs. Look at that. No changes here. We're just in a very relatively tight range, but no changes. The upside drift, for lack of a better phrase, continues. So I'll go and get that posted, the bias chart, and we'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.